Recently, round about 3 men, all different. They don't know each other. They reached out to me saying to me, TJ, at the moment, we qualify between 2 million and somewhere even like at a 4 million rand. And all of them are above the age group of 40 years. And they went on to tell me their stories, and their stories are actually on a sad note. At average, my good friends, all 3 men, they have properties of anything between 3 properties to round about 5 properties. And you might be thinking, oh wow, TJ, why is this a concern? Because these guys are set. That's what we might be thinking, right? Are they set? If we are meeting for the first time, my name is TJ, your host, and I'm a former banker and founder here at the TJ Tribe. And I do business with a focus in student accommodation, flips, which is buy and sell, and coaching, with the hope that all of us, as young, upcoming modern parents, we can be able to have passive income from real estate. Welcome to the channel. Well, here is the showcase. Not one of these properties, my good friends, is putting money in their pocket. Not one. So this is 3 men who don't know each other. So 3, at average, let's just say 3 properties. So it's 3 by 3. These are 9 properties in total between 3 men, and none of these properties are giving them cash. This is a common trend that I'm seeing amongst people. It's something that's very common, and it's actually very sad. The reality is that many of these people are men who are 40 and who are good in their employment, and some of them are senior managers to junior managers, and they don't have the time to do the right things, which is due diligence, and they are being preyed on with a lot of developers out there who are also just trying to make their own money. Remember, a developer is an investor themselves, right? And then what do they do? They are marketing a lot of these as investor properties. And these men who are over 40, they're like, yeah, I think that I am going into retirement, so let me buy these developments. Well, on the other side, as and when they are buying these properties off the development, they don't have to pay things like transfers, and in most cases, they don't even need to pay any money because the banks loves them and they give them 100%, even sometimes to 105 to 10%. And all they are doing is buying these beautiful properties. Is there something wrong with that? Well, if there wasn't something wrong with that, they would have not called me to tell me that they are not cash flowing. Well, if they are buying in a development, which is great because they are buying in good areas, but I want to say this. I spoke to all these 3 guys, and none of them could explain to me how they calculated what we call the rental yield on the property. So they signed for the offer to purchase, but they hadn't calculated the rental yield. And my good friends, today, in right under 10 minutes, I am going to show you exactly how to run numbers so this never happens to you. Let's go. So it's a fact amongst bottle stores, amongst beer halls, and amongst these clubs, and amongst the braais that you guys go to, it's a fact that a lot of people say, buy in a nice suburb. You can't go wrong. Oh, you can't go wrong in real estate. Yeah, well, the truth, my good friends, is that in a good area, it doesn't guarantee you good returns. New developments, fact, come with high prices because its premium has just been built right now. And it also comes with a high levies to maintain the common areas and rates and taxes that a lot of people are oblivious to. But if the rent doesn't cover all that, the property becomes what I call monthly expenses, and in my books, and here at the TJ Tribe, we classify that as a liability. It's not an asset, it's a liability. Because what's going to happen here is all these guys who are above 40, Basically what they are doing is they are now having to subsidize, or they are paying in. And what I want to do is that I want to show you a rough calculation, something that we can do right here. And I'm going to show it on the screen so that we can all follow. And how best, in 2 minutes, I'm going to show you how you can calculate your rental yield. Don't check out, because some of you will be like, okay. Now, the reason why they're being sold this is because they are being told a rental yield I'm going to show you right now. So the formula of calculating a rental yield, you do this on an annual basis. So you take all the, I'm going to show you now how you calculate that. So for instance, what you do is that you take the gross, right? You take the gross annual rent. So if rent was like, let's say 10,000, you say 10,000 times 12. Does it make sense? Okay. And then you divide that by the purchase price and multiply that by 100. Now, my good friends, that's how you calculate your yield. Many of you are being sold properties like these ones. The yield is 12%, or the yield is 10. And you all like, that's good. But they forgot to put the prefix important name, which is gross. Now, nobody eats gross money, right? Like you all know that, right? You are all employed. Your gross salary is like 2 million. But do you bring home 2 million rand per year? No, you don't, because that's your gross. The net is what is important. Your net is 2 million rand over a period of 12 months on your salary. But by the time it comes, SARS is taking 45%. So you can't be living on 2 million. Does this make sense? I want this to make sense, my good friends. Let's go on. Now the formula, I'm going to jump on into the formula here. I'm giving you formula so that you can understand and you can use it anyway. Now the formula of a net yield, which is very important here, we are always chasing after the net yield, is basically the gross annual rent, okay, minus the annual expenses, and then you divide that by the purchase price, and that's when you're going to get the net yield. If the net yield, if you calculate the net yield and it's a positive number, woohoo, me and you, we are in business. Now, I'm going to put on the screen here as I talk, but I'm going to explain it to you. I want to give you real fact numbers. I've given you the formulas, but now I want to give it to you in simple mathematics so that all of us, we can understand. Does it make sense? Let's go. We've got our pen and paper today. If you don't have it, you can always come back and rewind. I'm hoping to do all of this in less than 10 minutes. Let's assume your purchase price is 1 million. And your monthly rental is 10 million. This is kind of like what's out there on the market. And sometimes it's less than that. But for today's example, that's what we're going to make it, 10,000 rand. The annual rent income is now sitting at 120,000. We calculate these things at an annual basis for you to get that, right? The bond, let's assume that you're on 12% over 20 years. So which means that you're going to be paying 11,010 rand over the month, and your annual is actually 132 times 130. So that's 11,010 times 12. Basically, that's what it is. Then we are going to put in assumption, these are levies. Levies is going to be at 1,500. And when you are buying many of these developments, they don't tell you the levies because the levies are not even there yet. Or they tell you that don't worry, your first 2 years, it's on us. Is it really on us, my good friends, right? You are going to buy this in 2 years, but what about the next 18 years? Who's going to be doing this for you? Nonetheless, let me go. My name is TJ. I'm just trying to help you. Now, the levies is at 1,500, and you multiply that by 12, you're going to get 18,000. And rates, let's assume you're in Johannesburg, rates and taxes on a 1 million rand property. We are taking an assumption that it's 1,000 rand. TJ, it's a lot. It's an example. Jimmy, calm down. All right. 1,000 times 12, all of a sudden, you got 12,000 rand. Now, we got our annual figures, right? And remember, we did say the maths is your gross yield now is basically the 120,000, which was your rental yield, divide by 1 million times 100, and now this is your 12%. Many of you, this is the number that you're being sold into and you're running into. It's a 12% yield. Woohoo! Is it really? Well, let's look at the net, right? What is the net? The net now is going to be taking the annualized rental income, which is now 120,000, and then we take all the expenses included. So we're now talking about the bond, the levies, the rates. We come up to 162, 130, okay? And we divide that by a million and we multiply that by 100 to get our percentage. And now we are sitting at a minus 4.21. I've just given you a rough calculation there, right? You follow this formula, you'll be able to calculate the property right on the spot. So it's a good deal, it's not a good deal. However, I did a detailed how to run numbers, and we're going to connect that video in the link. So my good friends, you can see there in this particular deal, we are at a monthly negative. We are at a shortfall. No, we are not even in a cash flow. We are in loss. I like to use the word profit and loss, right? I don't like to use the word cash flow positive, cash flow negative. It's like confusing us, those that are not like super sharp like numbers. I like profit and loss. Are we in profit? No. What are we in? Loss. Simple, right? In this case, we are at a loss of 3,511. So which means that over a period of a year, by holding in this property, I'm at a loss of 42,000 Rand. Now, times 3, because remember those 3 gentlemen that called me, at average, all of them, they have a property of 3, they have a number of 3 properties together. Times 3, that's how much money they are losing per year. That's if we haven't even considered things like maintenance here, and we're going on. Now, anyways, my name is TJ. I'm just trying to help you. Now, had they done these calculations, my good friends, before they signed the offer to purchases, they would have easily seen that the rental that was being projected, or the rent that was in there, whether they bought when there's a tenant or not, they would have seen that the rental income here doesn't even cover the bare minimum of the bond itself, right? But they didn't. Now, my good friends, when you now have the one guy here is 5 actually. So when you are out there and you have 3, 4, 5 properties of these, and your salary, it starts working for your tenants. I'm going to say that again. Your salary starts working for your tenants instead of your tenants working for you. I don't know. I don't know why we all do this. Hey, my friends, I apologize that I had to break this conversation, but I just wanted to bring you in this conversation of property management. This can become such a hassle. If you've got more than one tenant and they're in different places, this can really become a stress, because all you're now needing to do is to manage tenant issues, maintenance calls, late payments sometimes, and endless paperwork. So my good friends, I have been deploying all my properties to a company that is called Productive Realty. They are out in Boksburg, and all they do is manage properties, particularly for early investors, particularly for seasoned investors, actually for all investors. And they do this because they themselves, they are also investors in properties. They understand the game of investing and managing. The money is not made in buying properties. I always say to people, the money is made in the management of the actual property, because that's a lifelong, you need to be able to pay all the things that you need to pay for. So the company Productive Realty, my good friends, and Leroy Slava, he has a big team there, and they manage their portfolio, and they can also manage your portfolio. So if you're in and around Johannesburg, particularly in the east, they are readily available to actually just be able to jump on board and take over your properties wherever it is right now. They will do placements for you. All of these things that we spoke about, the tenant issues, all of that will be gone because Productive Realty will be able to manage that for you. So my good friends, all you need to do is drop us an email. You can see where it is here, and the team at Productive Realty will be able to take all of your hassles away from your tenants, and you can be able to have peace of mind, sleep, hassle-free investments whilst they are managing all your tenants for you. So what are you waiting for? Be like me and jump onto Productive Realty. Let the guys help you out. So what's a healthy yield? I'm of the view that a healthy yield is something that's just going to give you money. I'm not going to say 15%, 20%, because all of you now you're like, yeah, TJ said 15%. I'm going to say something that's going to work for you. I'm going to throw in a curveball here though at the end of this video, so stay tuned in, don't go away. Now, I want to say to you, if you're already here, like these 5 guys, what now? What's the plan? Right? So we've covered everything, right? So you are here already. You're like this guys here. I think there's around about 3 things that you need to do. The first one is that you can maybe increase the income. I don't know. Can you increase the rent? I don't know. That's a possibility. It's one route of exiting. Increase your rent if it's possible. If the market allows you to do that. Number 2 is that try to cut as much costs as you can. I don't know. Can you go to your bank and ask for a lower interest rate? Can you extend the bond maybe to 30, 40 years? Is there a 40-year bond? I haven't seen it though, but yeah, I don't know. Can you reduce the levies? Is that even possible? We can see, my good friends, that these two are kind of like, you're stuck, right? My third one is that I always say to people, hey, maybe you might need to sell. Sell the underperforming properties. TJ, I've already spent some money. Well, but you are not making any money right now. So sell whatever that's underperforming. I always say that, for me, I'm a man of faith. So I try to do my business from a biblical perspective. The Bible guides us very well. And in the Bible, it says, be sure you know the condition of your flocks. Give careful attention to your heads. I'm gonna say that again because I think before I was doing real estate or before I was in business, this verse here meant nothing to me. But now it means a whole lot to me. Be sure you know the condition of your flocks. Give careful attention to your heads. What does that mean? Let me preach. Today it's a Monday. I'm gonna preach anyway. Now, in today's world, not many of us have flocks. We don't. So what is our flocks? Our flocks is our properties in this case. So if we don't know the numbers, we are literally gambling. We're not investing. That's what we're doing, right? That's what we're doing here. So my good friends, like I said, my name is TJ. I'm trying to help you. I'm hoping that this video has been helpful to you, and replay it. Share it with a bra. Run numbers, with multiple properties online. Go to Property 24, private property, run a couple of number scenarios so that you can get married to calculating. But go and watch this video here that we have tagged in here so that you can understand the in-depth part of running numbers on a deal. My name is TJ. Boom.